Welcome back. Hello and welcome. You tune into Market Fatafat. I'm Ankita Saxena, and this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first, before we get our guests and tell you all the stocks that are buzzing away, let's take stock of how the market is shaping up. Well, good recovery coming in on Nifty as of now. We are up 109 points from the day's lowest point. In fact, 0.5% from the day's lows. We are trading, we're managing to hold on to those 22,430 levels on the Nifty right now in the red, but nonetheless a recovery coming in. In fact, Nifty Bank was recovering very, very well in the first half, but suddenly we have given up those gains in the morning, especially after yesterday's blowout that happened as a result of IndusInd Bank. We did see a strong recovery coming in on Nifty Bank in the morning. We gave up those gains, but we are again managing to recover towards the second half. Now we are up almost 185 points, or 0.4% on Nifty Bank as well. For now, 213 points of recovery from day's low on Nifty Bank. Even as sectorally, Nifty Bank is doing well for itself. It is one of the top sectoral gainers. Nifty Financial Services is doing very well. Nifty Bank. IndusInd Bank is posting a very, very sharp recovery since yesterday. After the promoter came out and spoke about the issue, we did see the recovery come in, IndusInd Bank. In fact, it's up almost more than 5.5% in trade today. It's a top Nifty gainer as well right now. Kotak Bank is doing very well with gains of 2.5%. HDFC Bank is doing well. It's up almost 2%. So these banking names are doing well for themselves. But what's really taking it on the chin is Nifty IT, because of course, Wall Street seeing sharp cuts and that looming threat of recession in the US. Nasdaq is seeing that, and the domino effect is coming on to Indian IT as well. As you can see, Nifty IT is really under pressure since yesterday, and today also massive cuts coming in Nifty IT. It's down almost more than 3.5% in trade today. So that's how largely the market is shaping up. Largely the market breadth is also tilted in the favor of declines. But let's wait and watch on how it pans out in the last few hours. But let's get started with all the stocks also that are buzzing away in trade and why they are buzzing in trade. We are getting on board Nilesh Jain, who's the head of derivatives and technical research, Centrum Brokering, who's joining us on the technicals, and from our research team we are joined by Rabinder. Good afternoon to both of you, and thank you so much for joining us today. Well, I'll come to you first then. Nilesh, you've picked out Voltas for us. Now, summer season is here. Voltas is on the radar for a lot of techies. Tell us, what are you seeing on the charts for this one?
Very good afternoon to you. Absolutely. So, looking at the recent development that we have seen in this particular counter, and as we are aware of some climate change as well, a lot of I think the summer has arrived a little early, so will be beneficiary for the Voltas, Blue Star kind of companies. So in this particular stock, we have seen a good bottoming out formation today. In spite of weakness in the market, this particular counter is outperforming. So we are expecting a follow-up move to continue towards the levels of 1470, 1500 on the upside. With a stop loss below 1410, Voltas can be bought.
All right, coming to you, Ravinder, you've picked out Tata Motors for us. Tata Motors, in fact, was soaring away on the back of a very bullish commentary coming in. Do take us, what is the commentary? Why is the stock in focus?
Well, Tata Motors is in focus as management highlighted that they are confident of meeting JLR FY25 EBIT margin guidance of more than 8.5% and net debt free. And JLR focus will remain building on brands and superior mix-led growth. In India, TTMT's target of achieving double-digit EBITDA margin in the PV segment remains positive and was seen behind for PV EV businesses and EV contribution in FY27 to 28 to touch 15 to 20%. SCV segment may see some revival, and with TTMT acknowledging certain issue. And on global front, they have said that the demand in the US is holding up well, and there are also some brokerage note coming in where Elara has maintained the buy rating with target price of rupees 872 as compared to 909 earlier, and Novama also has maintained their reduced rating with target price of rupees 720.
All right, that's Tata Motors in focus on the back of that bullish commentary coming in from the management. That stock is up 2.8% in trade as of now. But another stock that is in focus today on the back of a management meet is Ultratech Cement. Now, Novama has come out with they're maintaining their hold on the counter with a target price of 1,100 of 54 rupees is their target price. They've reiterated its focus on growth and profitability. They expect the cement price hikes to continue in April 2026, aided by healthy demand in FY26. They also feel that the industry consolidation shall continue through both organic as well as inorganic means, and they're confident of achieving cost savings of almost 300 rupees per ton plus in FY27, and it expects to turn around their Kisoram Industries and India Cements by FY27 and FY28 respectively. This would require, of course, investment of up to almost 1,500 to 2,000 odd crores, but Nuvama is nonetheless maintaining a hold on the counter with a target price of 11,574 rupees, and right now the stock has turned absolutely flat, nonetheless trading in the green right now, but UltraTech Cement right now is turned absolutely flat on the chart. But let's go across and look at what Nilesh has picked out for us. Nilesh, you picked out Kotak Bank for us. Tell us, what are you seeing on the charts for this one? The Kotak is one of the banks that's doing pretty well, holding out pretty well in today's trading session. It's up more than 2%. But on the charts for the short term, what do you see for Kotak Bank?
Well, absolutely. This particular stock has been one of the outperformer within the private sector bank today, and it has also hit a 52-week high as well. So it is showing strength. In fact, in the past few trading sessions, it was one of the outperformer within the banking space. The structure looks very strong today. If you see the volume participation, the derivative data where we have seen more than 2% OI addition. So good long build-up is happening with the price and volume breakout on the chart. So we can expect a follow-up move to continue towards 2000 to 2020 on immediate basis. So with a stop loss below 1955, Kotak Mahindra can be bought. It is also on the verge of a breakout from its multi-month and multi-year resistance zone of 2000. So if at all it takes out 2000 level decisively from here, then the bigger target on this particular counter will come somewhere around 2200 to 2300.
All right, that's the view coming in on Kotak Mahindra Bank. But Ravinder, I'll come to you for big boy Reliance. Big news coming in for Reliance. Tell us, take us through the details of that big news.
Well, Jio Platform Limited has announced an agreement with SpaceX to offer Starlink broadband internet service to customers in India, and this agreement, which is subject to SpaceX receiving its own authorization to sell Starlink in India, enables Jio and SpaceX to explore how Starlink can extend Jio's offering and how Jio can complement SpaceX direct offering to consumers and businesses. Jio will make Starlink's solution available through its retail outlet as well as through its online storefront. Jio will not only offer Starlink equipment in its retail outlet, but it's and commenting on the this agreement, Reliance Jio Group CEO says ensuring that every Indian, no matter where they live, has access to affordable and high-speed broadband remains Jio's top priority.
All right, Jio is in focus on the back of that partnership with Starlink, and so is actually Airtel, because both of them have come out separately and announced their partnerships to bring Starlink's high-speed internet to India. So on the back of that, these two counters are in focus. But let's move on to another counter, and that is CG Power, that is in focus today, and it is on the back of the fact that company has won an order which is worth almost 450 crore rupees by Kinnett Railway Solutions for railway components for Vande Bharat, the train set, reflecting the strong presence in the railway sector. Now, this order involves supplying and servicing railway products such as propulsion kits, motors and transformers for the manufacturing of 10 Vande Bharat train sets. Now, additionally, CG Power has also signed a 35-year service agreement, reinforcing its long-term commitment to the railway sector. On the back of this big order win, CG Power is in focus today. It is succumbing to selling pressure in the market right now, and it is trading with the cuts of 0.8% despite the big order win coming in. But coming to you, Nilesh, you picked up Sun Pharma from the Pharma Pack. Tell us, what do you see on the charts for this one? I mean, if I look at the charts, it's up 1% in today's trading session, but last 6 odd months, it has been in a corrective phase. It has corrected almost 10 odd %. From here on, what do you see on the charts for Sun?
Yes, so in the past few months, we have seen the counter was under pressure, and still it is facing resistance at its 200 exponential moving average. But the good part of today's move is that it is led by good OI build-up as well on the long side. So good build-up on the long side is happening. From the lower levels, we have seen a strong rebound. And given the kind of volatility in the market, the focus is certainly will shift towards defensive. the FMCG, the pharma, these are the packs that are looking strong on the chart as of now. So within pharma, pharma heavyweight, Sun Pharma is looking strong, and we are expecting a follow-up move to continue towards 1700 to 1730 on the upside. So with the stop loss below 1651, Sun Pharma can be bought, and it is purely a pullback play. If at all it sustains above 1700, then it will be considered as a short-term bottoming out process, and probably then we might see the levels of 1800 as well. But for that, it needs to break 1700. But yes, from current level, we are bullish till the levels of 1700 plus.
All right, bullish till the levels of 1700 plus. That's the word coming in on Sun Pharma. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back with some more buzzers on the other side. Stay tuned. Welcome back. Here, tune into Market Fadafat with me, Nilesh Jain, and we are taking you through all the stocks that are buzzing in trade. Let's get going with all the stocks then. And Nilesh, coming to you, you picked out EID Perry from the sugar pack for us. Tell us, what do you see for EID Perry? Any sweet gains? Because as I can see on the charts, it has corrected fair bit, almost 14%. In fact, in the last 1 month, it has tanked almost 12% in trade. Tell us from here on, do you see EID Perry being in a sweet spot or not?
Right, so after a decent correction, it has found a support near about 650 odd levels, and from those levels in past few trading session, we have seen some bit of a rebound. And today, after a fall of 3 consecutive sessions, once again the stock has regained the momentum. So it looks like some kind of a base formation is happening here. Purely from a pullback perspective, this particular counter looks strong, and we are expecting a follow-up move to continue towards 725 to 740. So to play this pullback, one can keep a stop loss somewhere around 684. So that should be the stop loss of the long position. And looks good at current level from the risk and reward point of view. After a decent correction, the risk and reward is also looking favorable. So it's a good buy at current level for upside target of 720 to 735.
All right, that's the view coming in EID Perry. But coming to you, Ravinder, you picked up Godrej Agrovet for us. In fact, the stock was up almost 4% in morning trade, has actually succumbed to selling pressure and has slipped into the red and turned absolutely flat. But nonetheless, good gains came in the morning trade today on Godrej Agrovet. Tell us, what's the news flow that is powering the stock?
Well, Godrej Agrovet board has approved the acquisition of remaining 48.06% in Creamline Dairy Products Limited, making it as a wholly owned subsidiary of the company with total cost of rupees 930 crore. Prior to this, Godrej Agrovet held a 51.94% stake in Creamline Dairy Products. With this move, the company will hold now 100% stake in CDPL. CDPL is primarily engaged in milk procurement, processing and manufacturing and sales of milk and dairy products. Creamline's consolidated revenue was at 1,54,050 lakh in the financial year 23 and 24. With this acquisition, Godrej Agrovet aims to enhance its dairy products, leveraging Creamline Dairy's distribution network and product range to drive long-term growth in this segment.
All right, that's Godrej Agrovet that is in focus today on the back of that news flow. But we'll move on to the next stock that is TCS, that has acquired 100% equity share of Drishtya Southern India Happy Homes, and that is for a stake of almost 2,250 crore rupees. In the back of this acquisition, TCS in focus today. But TCS also, like the other IT counters, like I mentioned in the morning, IT is in focus today. On the very fact that the Nasdaq is facing a pullback based on the looming threat of a recession in the US economy, and that is having a domino effect on Indian IT as well, and all the IT names are declining in trade. But besides that, we also had we have Infosys also that is declining away in trade on the back of that, and we also had a note by Morgan Stanley today on the IT sector that see the downside risk emerging on both revenue growth of Indian IT services and valuation multiple. Also, the lower revenue growth forecast for the sector as a whole for FY26 and 27, they have downgraded Infosys to equal weight, and they are rather preferring TCS to Infosys, but nonetheless they have cut the target price. Infosys, it's equal weight and a target price of 1,740 rupees, and for TCS they're maintaining an overweight of 3,950 rupees. So these two counters are also in focus today. But let's move on then, and let's go to you, Nilesh. You have also picked out the IT pack for us. Tell us on the charts, what are you seeing?
Overall IT pack as a whole, if you look at Nifty IT index, where we have seen one of the biggest crack today, the structure-wise Nifty IT index is looking weak, and we are expecting a follow-up move to continue on the lower side. Although there could be possibility of some pullback, but those pullbacks should be used as a selling opportunity. The stock has broken below its 37,000 levels that was acting as a crucial support zone that has already been taken off. It is trading well below its all long-term and short-term moving averages. So as far as underlying is concerned, Nifty IT index is heading towards 35,800 to 35,600 on the lower side. So within this space, counters like Wipro, Infosys, these are the stocks that are looking weak, and we are expecting a follow-up move to continue on the lower side. So Wipro on the lower side may test the levels of 260, 258, and with a stop loss above 271, it's a sell. And similar with the case with Infosys as well. We are expecting further downtick to continue towards 1540 to 1500 with a stop loss above 1620. Infosys is also a sell.
All right, moving on then. From there, Nilesh, I'll come to you. Ravinder, you picked out Swiggy for us. There is finally a note that says positively of the company has come out by Jefferies. Tell us, what does the note say?
Jefferies has initiated a coverage on Swiggy with hold rating and target price of rupees 400. They say that the Swiggy is a top internet-based company in India, and Swiggy hold a 45% market share in food delivery, which is expected to grow at high teens over the medium term, which is supported by margin expansion. Also, they say that the quick commerce segment presents a huge opportunity, though intense competition could affect company's profitability, and as a result, EBITDA and free cash flow are projected to remain negative over FY25 to 27.
All right, well, that was the last talk for the day. Ravinder and Nilesh, thank you so much for taking the time out and joining us. With that, it's a wrap on this edition of Market Fatafat. I'll take your leave. Thank you so much for tuning in, but don't go anywhere because market action continues on ET Now.